Hey guys, this is Muhab, and in this video I will show you my only dividend stock that I have in my portfolio and the only dividend stock that I bought in the current market crash. But before I reveal the stock, I should mention a few things. First of all, this is not my only dividend stock because all other dividend stock out there are bad or overvalued. It's because I'm a growth investor. So I mainly invest in companies that have great growth in front of them like Tesla, Alibaba or Facebook, and growth companies usually don't pay dividends so they can fund their growth. However, as part of my strategy, I invest in one dividend stock and I call that stock the cash cow. And my cash cow is, drumroll please, Borat Developments. What? You've never heard of the stock? Well, let me tell you more about it after we run the intro. Borat Developments is one of the largest residential property development companies in the United Kingdom, operating a network of over 30 divisions. It dates back to 1953 and it's the only major national house builder to receive a 5-star rating by the NHF New House Survey for 10 years in a row. So in other words, they build houses in the UK. Before I talk more about why this is the chosen stock when it comes to dividends, I would like to mention that the stock is offered in London Stock Exchange since, you know, it's a British company. But yeah, in case you thought it's traded in the New York Stock Exchange, it's not. Anyways, let's talk more about why I chose a real estate stock in the UK to begin with. Why didn't I just buy the normal Coca-Cola or Johnson & Johnson stock for dividends? Why my dividend stock was a British stock, not an American one or one from the New York Stock Exchange? Why did I... In all seriousness though, I bought a real estate stock in the UK because despite the current thing that is going on and despite Brexit, the UK real estate market is booming and will continue on growing for the next few years. In February of 2020, UK house prices rising at fastest rate since February 2018 according to Bloomberg. Don't get me wrong, the current situation out there will absolutely slow down the development and purchase of houses in the UK, which will affect it badly in the short term. However, long term, the real estate market in the UK is great. To explain why in a very simple way, let's look at UK's map. There are two things that you should notice. Believe it or not, UK is an island, and it's about 3 times as small as Texas, and a lot of people want to live there, especially in London. This is all driving the prices of real estate to jump higher even with Brexit and the thing that is going around right now. So all of that made me want to invest in UK's real estate. Now let's talk about why I chose Borat Development specifically. Trust me, I looked into many UK real estate stocks. Wheatrow, Taylor Wimpey, Berkeley, Persimmon, Bellway and Galliford to name a few. I hope I pronounced all of them right, although I highly doubt that. However, Borat Development caught my eye because of the following. The company has enough cash to pay all of its debt and still pay dividends even if there was no sales whatsoever for the year 2020, and still have cash to cover most or all of its expenses. Many of the other stocks that I looked at barely had enough money to cover its debt, which is a no-no for me, especially for a cash cow. From top to bottom, the stock fell 58% as a result of the thing that is happening right now. It got a price to sales ratio of under 1 and a PE ratio of 6.35. In the past few years, its PE ratio ranged from under 8 to 13.5. Its PEG ratio has always been less than 1, which shows that there had been and there is great growth. It has an historic annual earning growth of 11.9%, and according to Simply Walls, the stock's fair value is more than double its current price. The stock is expected to have a 4.9% annual growth, and when I compare that to all of the other real estate stocks, this one was one of the better ones here in the UK. Most of the others had negative revenue growth forecast due to the thing that is happening right now. Also, it has a great future earnings growth. It will drop in the short term as shown in front of you, but long term it's growing exponentially. Also, fun fact, even with the earnings drop, the company can still cover its high dividend without using the cash that it has right now. So it's expected that the company will make 0.579 pence per share, which is down from the 0.743. However, the dividends right now is 0.466 pence per share, which means it can easily cover it even with a drop in earnings in the short term. Alright, let's talk more about the dividend. The company's current dividend yield is more than 9%, which is amazing. Now this is expected to drop a bit this year due to the thing that is going around right now, which will make the dividend yield go to 5%, which is in par with the US REITs. However, the dividend is expected to bounce back to higher levels up to 7.7%. Also remember, if the company wants, it can still pay the same percentage of dividend, and it may do. However, I'd prefer to get a lower dividend in the short term and ensure the health of the company, rather than them paying me a lot of money right now and then they struggle in the long term, which is not what I really want. I'd rather for them to cut the dividends short term for the next year or even 2 years, and then the year after they raise the dividend by a much higher yield. The company has been growing its dividend since 2013. In the past 7 years, the dividend grew by 1,764%, which is awesome. It seems like when the company lowers its dividend or stops paying dividend, like back in the 2008 real estate market crash, they come back with a huge growth of dividends. When they started paying dividends again back in 2013 after the market crash, the company grew its dividend by 500% until 2015. So in 2 years, the company's dividend jumped by 5 times, which is amazing. The same might happen in the next few years if Borat Development decided to lower their dividends this year. The current payout ratio is only 39%, which means there's huge room for growth of the dividend, which is why I'm confident that the dividend will grow even if the real estate growth in the UK was lower than the forecasts. It's great to invest in companies that have so much cash that makes you calm that whatever happens, the company have enough buying power to do anything it wants, rather than just barely surviving. So if the company decides, for example, to buy a smaller company, it can do that with the amount of cash it have. If it decided to cover all of its debt, it can do that. If it decided to pay the same amount of dividend, it can still do that with the amount of cash it have. So I'm really confident when it comes to the company not going bankrupt, and that's really important when you look into any stock, even if it's a growth stock. You need to make sure that the company has enough money to fund that growth. And when it comes to dividend stocks, or like I call them, the cash cows, you need to make sure that they have enough cash, and you need to make sure that the payout ratio is low enough so that they can actually afford that dividend and they're not just taking that to pay you that dividend, which is going to be really bad for the company. Thankfully, as I've mentioned before, Borat Developments have only 39% payout ratio, which means there's a huge room for growth even if the real estate growth in the UK was lower than the forecasts. In conclusion, I am buying the stock because 1. The real estate market is growing greatly in the UK. 2. The stock is undervalued. 3. The stock is growing in the short and the long term. 4. It has a lot of cash in hand. 5. The dividend yield is high. 6. The payout ratio is less than 40%. 7. The company is well known in the UK with a lot of accreditations and experience. It's important to mention that the company has that great of experience when it comes to real estate development due to its long history and awards it got. The management has 6.2 years of experience on average, which is higher than many of the UK real estate companies. I would say that the number of years of experience they got is higher than average. In addition, the company itself is much older than many of the other companies and has survived many recessions and drops in the market. All that experience counts, especially in tough times like the ones that we are in right now. Before you buy any stock, make sure to do your own research. I am not qualified to give any financial advice. This is just for educational purposes only, and I'm just a random guy on the internet, so always do your own research. Also make sure you have a perspective of 3 to 5 years in mind, and trade with logic, not emotions. I know it might be hard to do that right now with a lot of fluctuations in the market, but you gotta be patient, because the stock market is a device for transferring money from the impatient to the patient, as Warren Buffett once said. Alright guys, that's the end of the video. Hopefully I've explained everything you need to know about this great dividend stock. If you have any questions or any video suggestions you would like me to do, feel free to write them in the comments below and I'll make sure to respond to you as soon as possible. Please don't forget to like this video if you enjoyed it and subscribe for more stocks videos. Thank you for watching. This is Muhab and I am signing out.